The market, like the sea, can have many different moods. And one of those moods that is very common is called a risk-on mood. In this video, I'm going to show you how to recognize when the market is in a risk-on mood. Then I'm going to show you which currency pairs tend to be strong in a risk-on mood. And then I'll show you which currency pairs you really do want to avoid if the market is on a risk-on mood. I hope that you find this video helpful.
In this video, I'm going to show you how to recognize when the market is in a risk-on mood. Now, if you just take a look at this intermarket correlation slide, you can see that these following criteria help us recognize when the market is in what's called a risk-on mood. The market's always switching between risk-on and risk-off, so recognizing both a risk-on and a risk-off market is a crucial trading skill. Well, one of the first characteristics of a risk-on market is that you will have the so-called VIX lower. Now, the VIX is just short for the volatility index. Here's a look at the VIX here on the TradingView chart. You can see the VIX code is the volatility of the S&P 500 index, and it's essentially used as a kind of fear indicator. Now, in a risk-on market, the VIX will be moving lower. And that is a good example that the market is feeling calm and ready to take on risk. However, we're not just looking for the VIX to be lower or higher. We want to take account of a number of different factors. The other factor we want to be taking account of is how the stock market is moving. Now, this is the major indices here on the TradingView chart. And what you can notice when the market is in a risk-on mood, you'll see the major indexes moving and trending higher. So we want to see a lower volatility index. We want to see indices moving higher, stock markets moving higher. We'd also want to see commodities rising. So key commodities that are involved with risk-on would be commodities like copper and oil. So if we see oil moving higher and copper prices moving higher, that's a good indication that the market is ready for some risk appetite. We'd also expect to see bond yields rising. So when we see lower volatility index, when we see indices, stocks rallying higher, commodities rising like oil and copper, bond yields rising, so just take a look here at the bond yield chart. And you can see here's the yields of the 10-year government bonds of some of the major economies. And in a risk-on environment, we'd see these yields moving higher. Now, once you've recognized the market is in a risk-on mood, you also want to understand, well, which currency pairs does that mean I would like to trade? Well, the currency pairs that tend to move on a strong risk-on market tone are these. You tend to see Swiss franc, Japanese yen weakness. At the moment, due to COVID-19, the US dollar is also acting as a safe haven currency. So that's not always the case, but it is at the moment at the time of publishing this video. So for sure, generally speaking, the Swiss franc and the Japanese yen will weaken on a risk-on market. By contrast, we see the so-called commodity currencies, the Aussie, New Zealand dollar and the Canadian dollar, strengthen. So we would expect in this kind of market to be trading Australian dollar Japanese yen, New Zealand dollar Japanese yen, CAD yen longs alongside Aussie Swiss franc, New Zealand Swiss franc and CAD Swiss franc longs, as well as commodities to trade would be copper and oil commodities to the long side. So just being aware of this market can be incredibly helpful. So here we see the risk sensitive currency pairs, and if risk is on, we would have a bias to the upside because we'd anticipate the market buying these currency pairs on the safe haven flows, as is typical with the high beta commodity currencies and the safe haven currencies weakening. Now, of course, that means that if the market is in a risk on mood, you don't want to be trading these currency pairs short, because the pressure will be to the upside. So if the market is in a risk on mood, you don't want to be trading any of these risk sensitive pairs short, because you could quite quickly find yourself on the wrong side of the market. So use this to help you recognize what a risk-on market looks like. And then you can be making sure that you're trading the right currency pairs that match the present risk tone. I hope that helps, and please look out for a follow-up video on this video where I will explain how to recognize a risk-off market and which pairs to trade and which pairs to avoid when the market is in a risk-off tone. If you've enjoyed this video, please do share it with your friends.